The Paradise Papers represent one of the most significant leaks in the history of financial journalism, shedding light on the complex world of offshore finance and tax evasion. Released in November 2017, this set of 13.4 million confidential electronic documents relating to offshore investments exposed the practices of wealthy individuals and multinational corporations using tax havens to hide assets and avoid taxes. The revelations had far-reaching implications, sparking debates on tax laws, financial ethics, and the responsibilities of the wealthy and powerful. Source and scope. The Paradise Papers originated from two offshore service providers, Appleby and Astera, and company registries in 19 tax jurisdictions, revealing the financial dealings of politicians, celebrities, corporate giants, and business leaders across the globe. The leak was obtained by the German newspaper Süddeutsche Zeitung and shared with the International Consortium of Investigative Journalists, ICIJ, leading to a global investigation involving nearly 100 media organizations. Impact on U.S. entities. Among the entities implicated were numerous U.S.-based multinationals and high-profile individuals. The documents detailed how companies like Apple, Nike, and Uber exploited legal loopholes to shift profits to low-tax jurisdictions, thereby significantly reducing their tax liabilities in their home countries. For instance, Apple was shown to have restructured its Irish subsidiaries to maintain its low tax rates, a move that, while legal, sparked widespread controversy over the ethics of such tax strategies. Regulatory and public response. The release of the Paradise Papers prompted a swift response from tax authorities and governments worldwide. In the United States, the revelations added momentum to calls for tax reform, culminating in the Tax Cuts and Jobs Act of 2017, which aimed to address some of the loopholes used by corporations to minimize their tax burdens. Additionally, the papers intensified debates over the morality of tax evasion and avoidance, with public figures and advocacy groups demanding greater transparency and fairness in the global tax system. Economic and societal implications. The Paradise Papers not only exposed the scale of offshore tax evasion but also highlighted its impact on economies and societies. Experts estimate that tax havens cost governments hundreds of billions in lost revenue annually, funds that could support public services and infrastructure. The use of offshore jurisdictions to evade taxes undermines trust in the financial system and exacerbates inequality, as it allows the wealthiest individuals and corporations to avoid contributing their fair share to society. Legal and ethical considerations. While many of the practices exposed by the Paradise Papers are legal, their ethical implications are deeply contested. The leak spurred discussions on the distinction between tax avoidance, legally minimizing tax liabilities, and tax evasion, illegally hiding assets to avoid taxes, prompting calls for reforms to close loopholes and ensure that all entities pay equitable taxes. Experts highlight that the offshore structures revealed by the Paradise Papers operate within a complex legal framework that spans multiple jurisdictions. These structures often exploit differences in national laws to minimize tax liabilities legally. For instance, the practice of profit shifting allows companies to transfer profits from high-tax countries to subsidiaries in low-tax jurisdictions, thereby reducing their overall tax rate. The Organization for Economic Company Operation and Development, OECD, has been working on the Base Erosion and Profit Shifting (BEPS) project to address these issues, but the Paradise Papers underscore the persistent challenges in harmonizing global tax laws. Research conducted in the wake of the Paradise Papers suggests that the scale of wealth held in offshore tax havens is staggering. A study by the National Bureau of Economic Research, NBER, estimates that approximately 10% of the world's GDP is held in offshore financial accounts, highlighting the significant loss of tax revenue to governments worldwide. This offshore wealth is not evenly distributed. It is predominantly owned by the wealthiest individuals and corporations, exacerbating global inequality. The implications of offshore tax evasion extend beyond developed economies. Developing countries, which are often more reliant on corporate tax revenues, face disproportionate impacts. The International Monetary Fund, IMF, has estimated that these countries lose about $200 billion in tax revenue per year due to profit-shifting practices. This loss of revenue significantly hampers their ability to invest in infrastructure, education, and healthcare, critical sectors for sustainable development. In response to the Paradise Papers and similar leaks, there has been a push for increased transparency and regulatory reform. One significant development is the implementation of the Common Reporting Standard, CRS, by the OECD, which mandates the automatic exchange of financial account information between countries. As of 2021, over 100 jurisdictions have committed to the CRS, aiming to curb tax evasion by enhancing transparency. Additionally, the papers have fueled debates in the United States and Europe about the need for beneficial ownership registries, which would require companies to disclose their true owners. Such measures are seen as crucial for preventing the misuse of corporate structures for tax evasion and money laundering. The Paradise Papers have also sparked a broader discussion about the ethics of tax planning and the social responsibilities of corporations and wealthy individuals. Surveys conducted in the aftermath of the leak indicate a growing public demand for fair tax practices and greater corporate accountability. This shift in public opinion is pressuring governments and international bodies to strengthen tax laws and close loopholes that enable aggressive tax avoidance. The Paradise Papers serve as a critical reminder of the ongoing challenges in combating offshore tax evasion and the importance of international cooperation in addressing these issues. As experts continue to unravel the complexities of offshore finance, the revelations underscore the need for robust, transparent tax systems that ensure fair contributions from all sectors of the economy.